Moving from the legal aspect of things now onto consumers and more importantly focusing on their debt, it seems as though there is a growing demand for debt counselling for lower income earning consumers in South Africa. But to give us a better picture, I'm joined now by Benay Segar. He's the COO of the IDM Group for more on this particular trend. Benay, it's obviously not news that we know that South African households are highly indebted, that we're not South African savers, but maybe if you walk us through the levels of indebtedness, are we seeing significant increases here? And more importantly, are they unfolding in a particular LSM groups?
Thank you, Gugu, for the opportunity. What we're seeing in terms of the debt levels for South Africans is actually quite worrying. At Debt Busters, we normally publish every 3 months, we do a review of the industry. And what we've seen in the latest one, which was at the end of 2014, was that people earning 5,000 Rand or less, which would be generally your lower LSM groups, they are now, their levels of debt of their net income is at about 160%. So what this means is they need like 1.6 times the net income that they take home just to pay their debt that month, and that's completely unsustainable. Now compare that to the higher LSM groups, generally earning more than 20,000 Rand or more. Their debt levels are about 108, 109%. So we're seeing massive discrepancy in terms of the levels of debt that is coming through, and it seems like the consumers at the bottom end of the chain, lower LSMs, are being disproportionately affected to the extent that they're unable to provide for their families.
But now, how is this happening, especially given the fact that we've seen a lot more regulators coming forth and having stricter and tighter controls when it comes to credit lending in South Africa, and also protection of consumers who are highly indebted?
Yeah, it's an interesting question, Gugu. The National Credit Act was enacted to really improve access to all South Africans in terms of giving access to credit. What's happened over the last several years is that there has been an unprecedented increase in terms of unsecured debt that's being lent to individuals. Now, the original intention of the National Credit Act was to extend secured credit, allowing individuals, particularly at lower LSM groups, to be able to buy cars and access to housing. What's happened, though, is that over time, unsecured debt, which is basically store cards, credit cards, personal loans, has taken over in terms of the amount of money that's being lent. And what you're seeing now is that, on average, the lower LSM groups are being given much more unsecured debt at higher percentage rates. On average, this is about 24% annual interest rate compared to the higher LSM groups, which are being generally charged about 12 to 16%. Now, compare that to a few years ago, only in 2012, there wasn't such a big discrepancy because the levels of unsecured debt was much lower. It was roughly on par at 12% average interest rate that was being granted to individuals across the board. So what we've seen over the last few years is, the likes of micro-lenders and payday lenders and so on have been granting a lot more unsecured loans in the period 2012 to 2013. Now, they have pulled back quite a bit, particularly since the demise of African Bank. But the effects of this continue to be felt, particularly in the lower end of the spectrum.
Now, the big question is obviously, can we fix this and change the mindset of South African consumers when it comes to debt? And maybe if you can tell us about some of the endeavors that you have under Debt Safe with regard to consumer debt help. Has this proved fruitful?
Yeah, we think so, Gugu. We started Consumer Debt Help 2 years ago in February 2013, particularly with the intention of helping low-income consumers come onto debt counseling. Now, the way that debt counseling works is it's a process that you join as an individual if you are over-indebted, and you get into a structured program. Over the course of 3 to 5 years, you pay reduced payments that covers all of your existing debt, and you get out of debt at the end of that period. Now, the catch is, though, if you are lower income and you make lower payments, the fees that debt counselors would get would also be lower. Because of this, what was happening was that none of the debt counselors were helping these individuals. And I'm talking particularly for individuals who earn less than 6,000 Rand per month. The regulator, National Credit Regulator, used to have a subsidy for low-income clients, which we're really hoping they're going to bring it back. It hasn't been in existence for about 4 years. And over this period, we basically said, you know what, at the IDM Group, where our flagship company is Debt Busters, we really want to help these individuals. And we established a consumer debt help company where we've helped over 2,000 clients in the last 2 years alone, really focusing on this low-income clients. And this is our corporate social responsibility effort that we really put forward. And we're very happy to be able to help thousands of South Africans at the low end of the spectrum and hopefully get these people out of debt.
Well, we're certainly grateful that we have your endeavours underway, and I wish you the best in them going forward. Thank you so much to Benay Segar. He's the COO of the IDM Group there.